My name is Carmen Farino. I am a senior advisor at Kite Insights, and I want to welcome you to this fireside chat with my friend Bill here, who is the co-founder of ACX. Bill, we're going to talk a little bit about carbon credits and cap and trade, but maybe we ought to just explain what they are. So talk to me about carbon markets and why they're important.
Okay. But first, thank you so much for everyone for being here, and thank you for the invite. Carbon markets, really, at the center of carbon markets is that you're creating scarcity, right? You're creating a price signal. So a ton of carbon is a reduction of carbon over and above business as usual, right? So if you have a price signal in the market and you tell someone you cannot emit more than X tons of carbon, then you will have to go out and find a place to reduce that ton of carbon. And so what you're doing is you're basically using the markets to entice investors to go into the market and find the cheapest possible place to reduce that ton of carbon. Now, I'm not saying that they should be finding the lowest quality reduction of credit. I'm saying the most efficient way of reducing a ton of carbon, and that's at the center of what the carbon markets can do. Yeah. They can actually direct capital into most efficiently to reduce a ton of carbon.
Yeah. Well, when you think about that, we talk a lot about the cap and trade, but what part isn't getting done?
Well, I think that in essence, both sides are underperforming. I think one of the biggest problems that we have is that corporates don't have actual caps. So we're in this paradigm where a lot of corporates are operating under a voluntary space. And within a voluntary space, the difficulty is that when a corporate buys a carbon credit, they also buy reputational risk. Yeah. Right? Because the market is scrutinizing them and is saying, you are buying a carbon credit that may or may not be of good quality. Okay. And so they're pigeonholed into a position where they need to justify themselves to the market. Okay. So that creates a very difficult paradigm for the market to scale, right? The decision doesn't want to be taken. There's a huge cost to making that decision. So if we pass that mantle to governments and have the government stipulate what the cap is and have the government stipulate what carbon credits you can deliver to them in order to offset that cap, now you've pushed the quality question into the government's camp. Yeah. And so you'll have the cap side of the equation completely solved, and that by extension will just scale up the trade side of the equation. Okay. So that's really what's needed. What we really need is robust caps around the world from governments more than anybody else.
I mean, it's interesting when you put limits on things, you start to generate a lot more creativity. People start to think differently about that. But doesn't that also figure in with the need for liquidity? I mean, after a while, you're looking at ways to bring more and different funding into the market. So maybe explain a little bit more about how that can work.
Well, once again, if you're operating in a paradigm where everybody is looking at carbon credits in an individual basis, so this carbon credit is from that forest, or this carbon credit is from this other jurisdiction, other kind of technologies, then every single one of them is traded and priced individually, sure, and unilaterally or bilaterally. So, but once you have a government, so probably the Singapore tax regime is a good example. In the Singapore tax regime, you're able to pay part of your tax using a specific set of carbon credits. Okay. So now the government has effectively told you these are quality carbon credits. Yeah. You can create a contract within an exchange such as ACX, and now you have a tradable instrument within that marketplace, and all of that liquidity is very important. I mean, we were mentioning there that we're probably using 5% of all the financial tools available in the toolbox. This is a good example, right? So if you are, I honestly believe that there are billions of dollars out there that are sitting on the sidelines that want to invest in carbon. They know we're moving into a carbon-constrained world.
Yeah.
But when they look at the carbon markets, what they see is a bit of a dog's breakfast.
Yeah.
Right? It's a mess. There are many registries. There are all kinds of sort of issues that have formed a bit of a moat around the carbon markets, and only those willing to brave the moat are able to actually trade within it. So if you standardize markets, you release all that funding.
Yeah.
That speculative capital, which is not a bad thing, because that'll create tremendous price pressure, and that price pressure will bring the price of carbon up, which will then generate interest in investing in carbon projects, and the cycle will continue.
Well, and when you generate that scarcity and the value goes up, essentially you're de-risking the ability to invest.
Correct.
And I find that interesting because we see it in something as simple as a farmer.
Yeah.
So maybe you can use that analogy and kind of give a sense of why that would matter at a kind of a microeconomic level and a macro as well.
Yeah, exactly. I mean, I always use soybeans for some strange reason, maybe because I grew up in Brazil. But if you're a soybean farmer, you don't think twice that someone is funding your seeds, that you can get money for your fertilizer, you can finance it. You can hedge your future product. You can use all kinds of all the financial instruments that we sort of take for granted. None of that is available to someone that's farming carbon, right? So farming carbon in the sense that someone that's actually investing in protecting a forest, or someone that's investing in capping methane, fugitive methane from abandoned wells, for example, right? Because there's not that price of carbon. Because there's no price of carbon, a lot of the things that are available to traditional farmers are not available to carbon projects. If we're able to create a price signal in the market, I honestly believe that the revolution will accelerate.
I mean, I think that's the key here, right? There's a compressed timeline. There are, huge goals to meet. We've been on this stage. We had 3 different programs today around decarbonizing, and that alone gives you a sense of how interested people are. So I want to hear, why did you start the exchange?
Well, I started in the carbon markets in 1999. So. That's only 2 years after the Kyoto Protocol, and what we did is we looked at. I was a bond emerging markets bond trader before, and carbon credits are no different than other emerging market bonds in that it's sort of a north-south commercial relationship, and so I was very well versed in creating transactions in Latin America and selling them into Europe. So when I discovered the Kyoto Protocol, it immediately made sense to me. Yeah. And in my mind, it made sense to my it complemented the skills that I'd built. So we created one of the largest carbon aggregators during the first Kyoto era. We sold that in 2007, right before the global financial crisis, which genius move, but I can't take any credit. And then we were approached a little bit later, about 5 years ago, by the Singapore government at the time, with this idea: could we build a digital carbon exchange? And so we started sort of teasing that out. And we centered on this idea that we wanted to bring traditional commodities architecture to the carbon markets. Yeah. And that's central to everything we do. So in Abu Dhabi, the interesting thing about ADGM is that it's the only jurisdiction in the world where carbon is actually a regulated commodity. So anywhere else in the world, literally the two of us could open an exchange and be well within the laws, including the United States, et cetera. So this ecosystem that's been created in AGGM is taking us a step closer to a traditional commodities architecture. So we're looking to create contracts, create liquidity. We have over 250 companies from 31 countries. And we're also bringing exchanges from other areas, and all with a centralized order book. So today, if you put up a carbon credit for sale in Singapore, it shows up in Abu Dhabi and vice versa. By the end of this year, we'll have we will have announced at least 5 other exchanges that all share liquidity within our ecosystem.
I mean, that's fascinating. I think the choice becomes, do you want to be somebody that adapts to what's happening in the market, or do you want to help shape the way this evolves? And so I think about the way the UAE is approaching it, or Singapore is approaching it, or you're approaching it as a serial entrepreneur, who's going to look at this and say, if I get in early, I have an opportunity to play a role here. So how do you incent people? What do you think, would get people more interested in looking at this? Is it an opportunity for businesses really to think about the golden trio of sustainable, profitable growth? In the way they look at the future, kind of strategy that they're putting together.
Yeah, I think what I've seen in the market is that and what you do is you get the McKinsey studies, and they tell you this thing is going to 200 billion and it's now at 2 billion. So you're like, okay, well, that's a no-brainer. How do I get into this market? It is extremely complicated. The risks, there are funds that are being created by people that have never been, never developed a carbon project. And that want to sort of apply traditional financial rigor to carbon projects. It doesn't actually work that way. Carbon projects are probably, I think the closest analogy is it's like herding cats, especially nature-based projects. People have this idea that developing a nature-based project is pretty simple. You find a forest, you ring fence it, and it's all gone. That's no problem. But you forget that there are people that live in those forests. There are people that have a full livelihood around those forests. There are cultural attachments to the way people live in those ecosystems. And so for you to be a successful investor in carbon projects, it's not something that you can just apply a spreadsheet to. So, I think people should invest in it, but they should also go in with eyes wide open.
Well, I mean, it's interesting that in any ecosystem, right, you're going to have stability and instability, but the judgment and the education, I mean, part of why you're up on this stage is we want to continually educate people. We want to bring in different voices. So, one of the things you're interested in is looking at Article 6 and why you think that's important. And people may not even know what Article 6 is.
Yeah, I don't know if I actually know what Article 6 is, but maybe a little bit. But what it is, it's just a framework that basically allows for trading across different jurisdictions globally. There's 6.2, which talks about transactions across countries, and then 6.4 that opens up to other stakeholders. But really, at the center of it is that we're moving into a reality where it's probably it is a function of the Paris Accords that now every country is very aware of their own carbon accounting. And so what Article 6 ensures is that there are transactions across geographies, but that those transactions have corresponding adjustments in order to not allow for double counting. So if country A is issuing a carbon credit and it's sold to country B, then the relative balance sheets of each country would be adjusted so that ton would not be claimed by two countries. So that's the main sort of understanding around Article 6. The importance of Article 6 is that it looks to sort of weave all of these markets together, and that's what's important, because we'll hopefully slowly move towards a true price of a ton of carbon. And with that, we should be able to start unlocking all those other financial market instruments that we were talking about previously.
Well, and we say this, the lack of financial instruments for this market means that you've got to take an idea from one market and then apply it to this one and get a feel of how to do that. And it forces an overlap and maybe a greater collaboration between business and government. But that's its own ecosystem. You know, when does government step up? When does government step back when business steps in? So how do you see that ebb and flow between business and government changing as we think about this?
Yeah, yesterday I was in a roundtable discussion, and one of the discussions, very query from someone from the Kenyan delegation, and she was wondering in terms of what should they do, right? And if you again just look at projects in Kenya, in the absence of an exchange within that country. So my recommendation to her was, you should set up a marketplace, obviously, and I have one, but you should set up a marketplace where all transactions transact through for one reason only. Because today what's happening is a project developer, once they find a buyer, they clamp on for dear life. They're not going to let that buyer go. They will have a negotiation within a bilateral negotiation, and they will end up at a price that's fully negotiated. They will have very little power, and frankly, the investor also is putting themselves in a position where they're entering into a purchase agreement that's highly illiquid with no price transparency. So it's not just the project developer that's hindered. But if you force those transactions to happen within an open platform, that bilateral communication between the buyer and the seller actually happens on exchange.
Okay. And
so you eliminate what I once said was, there in Africa in particular, there's a bit of a climate heist. I talked once to a project developer that had hired a consultant. He sold credits to that consultant for $1.50 a ton, and only to find out that a week later they were sold for $7.50. So that $6 financial tax were $6 per ton that could have made their way into the battle against climate change. That's the beauty of exchanges, right? You can't hide. It actually gives you a price.
But that gets into the idea of equity. What we talk about is climate and equity are inextricably linked, right? So you think about the global South. You want to get the money into these, to the hands of people so that they can really accelerate, building these projects. So how do you do this just country to country? Do you see it happening in, just as one-offs, or is there a way to kind of really look at groups of countries coming together and thinking about this kind of more holistically?
I think countries are joining forces if they are, if their individual economies can't sustain their own sort of standalone ecosystem. Yeah. So we've seen it. There's a group in Latin America, which is Chile, Peru, and Colombia, I believe, that have the stock exchanges of those three countries have sort of held hands and are creating a carbon market. So that's an example of countries. There's around sort of Eastern Africa. There's some conversations. Western Africa around. Again, some conversations about countries sort of coalescing. Yep. So it's definitely the way to go, because you want to share liquidity, and the cost of a trading platform is somewhat onerous.
Well, so I want to talk a little bit about what you've seen in not just the evolution of this issue, but maybe the evolution of COP. Years ago, COP was a bunch of policy people sitting around and talking, and there wasn't as much, business private engagement. What have you seen in terms of that evolution over the last few years?
It's been actually pretty interesting because I honestly can't remember the last time I was in a green zone.
Yeah.
So I think that the organizers of COP28 have done an amazing job in making the green zone relevant, to be honest. In fact, I heard today that the World Economic Forum, for all intents and purposes, might be taking a back seat to this event in terms of its climate impact. So I think they've done a great job. It also speaks to, I think I said this in New York Climate Week, and I got a lot of attention to it. I think during the first Kyoto era, when I had my first foray into the market, we had a lot of climate skeptics. It was a sort of tough going. You'd go to cocktails, and there was always, a couple of pseudoscientists there to debate. But the difference today is that we have Mother Nature on our side, and she's really angry.
Yeah.
And so I think that has really galvanized industry as well. They can't hide. Their stakeholders are asking for more action. And so I think the fact that what you're seeing in the green zone is probably an after effect of that reality.
I think that after effect helps to drive the evolution of how this business government interaction goes. So I want to talk about transparency. When you think about ESG and applied to a corporation, they're talking about transparency in what you do. When you look at the carbon credit market, you want transparency. So why is transparency so important? At this juncture, is it driving more trust? Is it an ability to draw new people into the market or new organizations into the market?
Well, I think at the center of a carbon credit is trust, right? So and transparency and trust go hand in hand. So we're not building widgets, or we don't have coffee beans that you can actually look at. What we're creating is a ton of carbon abated, and so that by definition involves a level of trust in the underlying instrument.
Yeah.
And without transparency, there is no trust, and without that, there's no value.
Yeah.
So I think by definition, that is what the market is all about.
Well, there's also an angle of this where you think about government sitting alone in a room and coming up with solutions. But part of it is that you need to have an overlap and more collaboration. So why is it important to have business people in the room when these things are being locked down from a policy standpoint? It seems to me that more of that market perspective could actually help make have the right disciplines and the right kind of boundaries, but also encourage and drive the investment and the change.
Yeah, there is a sort of competitive friction, I think, between corporates and sort of the people incentivized by the profit motive on one end, and then sort of the green establishment in terms of the policy makers and NGOs, et cetera, and there is friction there. And it's not an easy conversation. There's a lot of distrust, but it's crucial if you're going to create a carbon market, emphasis on market, to speak to people that know what a market should look like. I'm reminded of those paintings in Renaissance paintings where people hadn't actually seen a certain animal,
yes,
and they would just paint basically a human face on the animal, right?
Yeah.
That's what we'll end up with if that conversation doesn't happen.
That's going to stick with me for a long time. I think there's something interesting here around the value of scaling up the carbon market, and should we be emphasizing a shift more toward direct reduction in emissions by corporations, or should we look at it differently?
I think that a cap on the emissions of companies is absolutely crucial. Without just a voluntary market is a wonderful thought, but it's not sufficient.
Yeah.
So we absolutely need to have the cap part in order to have the trade part.
Yeah.
Without the cap, it's very difficult for us to have a meaningful scaling of this market. And I think it's interesting because it's happening piecemeal. We're not in a world where nothing's happening on the regulatory side. So you have the border adjustment mechanism, CBAM, in Europe, that basically stipulates that if you are importing product A into Europe, they will quantify the amount of carbon emitted for that product A, and they will, let's say it's a ton in our example, they will then look at that ton and say, well, how much is that carbon cost in the country that's bringing that good into our country? And let's say that's zero, then the European Union will charge that product 90 euros for that 1 ton emitted, right? And so that will, in essence, force the company, the exporting country, to bring up the cost of carbon in their country.
Okay.
Because why not just keep that tax money for yourself? Why give it to Europe, right? Yeah. And so CBAM is one example of an interesting initiative that will force the propagation of carbon markets around the world.
When you say that, it hits me that there's a credibility gap from parts of the population that you really have to talk about the ability of the markets to actually drive positive change, to really let them in, because a lot of times they think businesses are really just out for themselves, but the truth is they are out for themselves because we all need to do this.
Yes, no, so they are absolutely
we are
out
them
for themselves.
in a way.
Let's understand what motivates them, and then let's force them change their behavior for the better.
There is no better way to get something done to give somebody your idea and make them think it's theirs.
Exactly. I mean, if you use someone's profit motive, you can then get the behavior changed. Yeah. But if you're just hoping for them to voluntarily and altruistically decide that they're going to do something, it goes away. Which, by the way, is one of the biggest problems of the carbon markets. Yeah. Is that scarcity is a function of political will. So one of the biggest problems with, in any commodity, there are price fluctuations. So, if, again, let's go to soybeans. If you have a really good year, there's going to be a lot of them, the price is going to go down. And then if a bad year, there's going to be not too many of them or whatever. In the carbon markets, a good year and a bad year, it's not weather related, it's political will, the winds of political will. And that's a dangerous world to live in, right? Because if political will changes, it's very difficult for you to run a business on political will. But that is the reality. It happened after the global financial crisis. The carbon markets were going pretty fine. The global financial market hit, and the collective political establishment turned their back on climate until the Paris Accords. Yeah. And the price of carbon went from 20 euros a ton down to pennies.
Yep. Well, I mean, are we in a crisis with the carbon markets? I mean, there's some speculation. The media, you hear about that. You see that the fluctuations, but some people are saying it's not effective. But is this just kind of a recalibration and maybe a move to behave differently? Because there's two most spineless things are jellyfish and politicians. So how do you look at this in the long run? Is it a dip, and that now we're going to build out of this and kind of see maybe more rigor or more trust or continuity?
Yeah, I think that it's interesting. We had So we mentioned the global financial crisis. I mean, COVID, for all intents and purposes, was a pretty serious global financial crisis. And then you have the Ukraine effect on the energy system in Europe, and all of that is sort of a bit of a financial crisis in and of itself, right? We had inflationary pressure around the world, yet the climate conversation continues. So I think I don't think that, as I said initially, I think Mother Nature's not happy, and that's helping tremendously in the will of people to do something with climate. I think the problem today, the fact that a lot of the prices have come off in the carbon markets, really because, and someone from Vera said this, we're sort of building the airplane while we're flying. So there will be bumps along the way. It is a difficult. It's a difficult set of facts that you need to understand. So I just think that it'll slowly migrate into a more cohesive market with a better price signal. Right now, we're just sort of, we have problems with certain projects. The rigor of certain methodologies aren't well accepted, but those are being corrected. So, I think we're just sort of, these are just growing pains.
Yeah, I mean that's my point, is that if you want to do something new, it's going to be difficult. There's going to be a launch and learn kind of evolution that helps it become more efficient and more effective. So how do you prioritize? What's the order and what's the methodology that you use when you look at this to drive that stability? Is it more talking? Is it more in a relationship with government? Is it more incenting business to look at this, to really get to the scarcity principle? I mean, how do you prioritize all the ways you can help stabilize?
Yeah, I think you'd drive yourself crazy if you tried to sort of do all the different things that are necessary in this market. So we've really sort of zeroed in on just one thing that we do, and if we do it right, I think our contribution is going to be massive, right? So if we're able to create within a regulated infrastructure, a regulated exchange with a true price signal, we're going to be in a situation where investments in carbon projects are going to become more, I guess, easier to make because there is a price signal that you can trade off of. That will unleash investments, it'll increase the price of carbon, and so that profit motive at the beginning will have that effect in the long run. So that's what we focus on, and only that.
Okay, so that means being an expert like that and driving that single discipline does it pays dividends, but it also forces you to look at other experts in different places. And so how do you approach those evolutions? How do you look at different parts of this entire complex ecosystem and think about what's going to happen next? Do you see anything on the horizon that is either particularly inspiring or particularly worrying as we go through this evolution?
One thing that's worrying is that, and I've seen this at the COP, we had a big announcement in Sharm el-Sheikh as well, is that out of these meetings sometimes you get a lot of these announcements where they say, okay, we're going to deploy $500 million or $500 billion or whatever it is. That's somewhat myopic in that carbon projects can't take that kind of investment.
Okay.
Right. So you have huge corporations, huge. I don't want to say that this specifically, but someone like the World Bank, for example, the level of rigor that the World Bank has to go through in order to make an investment in any investment is stupefying. A carbon project just simply can't sustain that level of due diligence, the cost of that due diligence, etc.
Yeah.
And so one of the biggest problems with these forums is that when you hear these announcements of hundreds of millions of dollars that there's going to be deployed to the climate fight, is that they don't realize there's this massive sort of bottleneck in the middle, where that funding just won't go through.
Yeah.
So one of the things that I would caution is, a big announcement of a big amount of money. It's wonderful, but you have to take that next step. How are we going to get that money from point A to point B?
Sure.
And that's tough. That requires you to really understand the dynamics of carbon markets.
Well, and that's my point, is that if the transmission is broken between those, then promises don't become reality. And so that critical thinking around the new products, around the ways that we have to look at things differently, that becomes more vital. And as the time ticks and the urgency rises, we have to really look at how quickly we can solve that. Is it a launch and learn thing? Is it an advocacy thing, or is it really just get it done and then learn from what you do and see if you can have other people understand and adopt those practices?
Yeah, I think there's a little bit of everything that needs to happen, but again, this whole idea of using market forces, right?
Yeah.
So if you simply, instead of thinking that I'm going to have a $500 million fund and I'm going to deploy $500 million myself, if you set up a $500 million fund and you said, I will buy carbon credits at $20 and above that meet these specifications,
yeah.
You better hide, because people will show up at your doorstep. But those will be dollars that are deployed on your behalf.
Yes.
Right.
So you lose a bit of direct control, but you gain the dynamic of putting it into the market and helping that.
Exactly.
Elevate
And I'm saying not actually saying that you have a fund and buying credits that are already in the market, right? So you can turn around and say, I will buy carbon credits from 2025 onwards.
Yeah, future markets.
Future ones. And so in that sense, you would promote investment into new projects, but you would give the market a floor price, right? If you do it right, you may not even have to spend the money. Right?
Yeah, it'll just drive the value itself.
It'll drive the value itself, and you'll just become the floor for the market.
Well, we're winding down. We've got a couple of minutes, about 7 minutes left. I want you to kind of take a step back. When people leave and they're on their airplanes and they're going home, what do you want them to understand about the carbon market? And what do you want them to think about as they start to look at this? A lot of people are going back and thinking about capital deployment. They're looking at their organizations and trying to understand their ESG strategies, or their advocates, or they're looking to kind of engage in a meaningful way. What can they do, and what can they think about that can help the situation?
Well, I think in general there isn't one one correct solution for this. It's interesting. You talk to people that are, we're only going to do removals. Removals are where it's at. We no longer are going to look at avoided projects, right? We're not going to avoid carbon. We're only actually going to focus on projects that are removing credits. Or you'll have people that don't like market dynamic, but like, carbon taxes, or don't like either. My mind is you need absolutely all the tools in the tool shed to get this problem solved. Taxes and markets go well together in other formats, so I think that's one thing. I think that central to scaling these markets are taking the risk, the reputational risk, away from corporations. We can't assume that corporations are going to do their best without being mandated to do it. They'll do a good job, but they won't not even close to what we need to be done.
Yeah.
So the only way we're going to get there is if countries step up and create that scarcity, right? We need that political will. We need them to work together and create that scarcity, and then to get out of the way. Because if you want to reduce a ton of carbon, the profit motive, there is no better way to do it efficiently than employing the profit motive.
It's interesting there, though. You're asking a lot of different people. So government steps in and they put the boundaries and they develop the scarcity, and then they get out of the way. Problem is, people don't want to get out of the way. People hang out at the party maybe too long.
Yep.
So how do you have that meaningful conversation that says it's a vital role right here? As you do that, then you have to step away. And you really need to convince them through your modeling. I mean, Singapore's a great example. Once you show them that that's possible, is that what you need to do? Is really show them? Because sometimes they don't.
We that are a little older. I mean, you in the 70s you had acid rain in the U.S. And acid rain is no longer a problem because a cap and trade scheme was put into place. Right, and so the cap worked. Government regulation came in. They allowed for the trading of SOx and NOx. The cap continuously decreased, and we no longer have acid rain in the United States. That was actually the inspiration for what for the carbon markets today. Yeah. When the Kyoto Protocol, when Rio '92 happened. And the conversation started. Sort of, we agreed that there was a problem with carbon and that it was man-made. The solution, which was actually put forth by the United States, was, well, that's a pretty easy problem to solve. We just did it with acid rain. Why don't we do it with this? So if you just put the regulation in place, I mean, I'm not saying you get out of the way. You have to continue regulating it, yeah. But use it because it actually does work, and we've got history to prove it.
Well, I think that was interesting. In a program yesterday, we had some investors, some from the government through Hub 41, and we were talking exactly about that. The idea of a loose, tight approach. But the collaboration has to be there. So I think it's interesting that when you look at that overlap and that collaboration, you start to see the impact. Organizations are going to be behaving differently. Government might behave differently. Private corporations might behave differently. So how much change do you see? Flash forward 5-10 years from now, what's this going to look like?
Well, I'm an entrepreneur, so I'm optimistic by definition, I guess. But I honestly see a very robust carbon market with some banded price points and tradable instruments, a well sort of oiled global machine. So we're moving in that direction. 5 years might be a little too aggressive, but within the next 5 to 7 years, I would say we're going to see a very sort of well-developed carbon market.
See, I thought you were going to say 10. So you are optimistic.
I am optimistic. Yeah, exactly.
Well, I'm going to thank you for the time today. Over the course of today's events, we've had several different decarbonization discussions. And I think what you've done is you've kind of grounded it now in the business fundamentals and the market dynamic. And I think cumulatively, it's a very nice kind of ending of our day here on decarbonization. So thank you so much, Bill, for joining us.
Thank you, and thank you for the invitation.
Wonderful.